Breaking news as Michael Barr, the Federal Reserve's top financial regulator, avoids being fired by President-elect Trump by resigning. So today we're going to go into all of that, and we're going to ask the questions like, could President-elect Trump even fire anyone from the Federal Reserve? And why did Michael Barr even step down? Doesn't he have good financial plans as far as tightening bank regulations? And why does President Trump want to deregulate banking institutions, being that we have such an inflation problem right now? By the way, you guys, I hope you enjoyed today's video. And before I begin, happy Tuesday morning, Mitch Vexler. How are you, sir?
Good. It was a very nice sunrise today. It's extremely cold here. It was for Texas, but it's all good.
It's not even light here yet, to be honest with you. It's just cold.
The sky was actually pink as the sun was coming up this morning, just due to the temperature. So it was actually pretty nice.
Well, maybe Dallas is a little bit better than Houston, Mitch. Either way, the name of this article is Top Federal Reserve Bank Regulator Under Fire from GOP to Step Down Next Week. And this came out yesterday evening. This is from AP. And this is what this article says. And we'll flip back and forth to a couple things here. But the Federal Reserve's top financial regulator said Monday that he would resign next month, avoiding a potential confrontation with the incoming Trump administration and Republicans in the Senate. I don't like to hear that. Fed Governor Michael Barr said in a letter to President Joe Biden, and we'll look at that here in a minute, that he would step down as vice chair for supervision. I don't think he's doing a good job if his job is to supervise, but that's all right. February 28th or earlier if a successor was confirmed. I mean, I'm pretty sure they could bring a child to fill his shoes. Yet Barr said he would remain on the Fed's board of governors. Oh, thank goodness. So you could do a great job there too. His term as governor lasts until 2032. Here's a letter right here. This goes into nothing significant. He just basically is thanking everyone, doesn't go into anything juicy. He says on the bottom he wants to thank the U.S. Senate and Jerome Powell, and he's happy to be there, and he's going to stay on the Board of Governors. Before I finish out the AP article, I want to just stop and pause a second here and talk about that letter. Mitch, my first question to you is, can President-elect Trump, even fire someone on the Federal Reserve? Like, can he fire Michael Barr? Can he fire Jerome Powell?
Well, I find it kind of interesting because I literally just yesterday morning finished the third article for Zero Hedge. The second one probably be out later this week, the third one early next week. But the third one is a full throttle response as to what the actions of the Federal Reserve have been. And I'm going to have 50 bullet points, any one of which is enough to justify shutting the Federal Reserve down. So the argument that they were making, well, we're going to resign because we don't want to be fired. And then they turn around and say, well, we're independent of the government, so we can't be fired. In other words, Powell's taking the attitude he can't be fired. Yeah, no, yes, you can. Yes, you will. And goodbye and good riddance. The Federal Reserve, as I've said multiple times, needs to be shut down. They are the biggest purveyor of inflation on this planet. The IMF follows the Federal Reserve. And all this is laid out. And the only reason I haven't published this document yet is because I've got a meeting tomorrow afternoon, and that document will be shown to that political person. And so they'll know exactly where we're headed with all this. So yeah, I find it very, very interesting. I have yet to see anybody. There's 23,000 people in that Federal Reserve, and what we've got published in this document, I'm just one guy. How come I know this and they don't? They are the ultimate purveyor of inflation. So you've got them and you've got your local taxing entities. This is going to get pretty interesting pretty quick.
Well, here's the thing, Mitch. So just to reiterate what your answer was, essentially, okay, the way to fire, let's just use Jerome Powell as an example, is President-elect. I guess, maybe technically, right? Technically, he can't fire Michael Barr or Jerome Powell, but what he can do is he could just close it down. He can just close that bad boy down completely, and then they all lose their jobs. Isn't that correct, Mitch?
Yeah. Now, I'm highly sensitive to the fact that there's people involved in this that are good people. I get that. But at the tail end of the day, you can call it collateral damage. You can call it whatever you want. The amount of money that's being stripped from mom and pop by virtue of this inflation is straight up criminal. The idea that the Federal Reserve itself claims autonomy as in you, the federal government, can't lay a glove on us and we get to do whatever the hell we want, is insanity. So yes, the answer to the question is shut it down.
Mitch, let's move on to the next thing here. And this is a little bit confusing because, Michael Barr was a supervisor and working on regulation, but yet the regulation never came to fruition. Barr oversaw the proposal of tough new rules, and we'll go into those new rules here in a second, for the largest U.S. banks, which would have required them to significantly increase their financial reserves. And I personally, as a consumer and a citizen, I don't think it's a significant increase at all. It's actually only about 10%. I think they should have all my money in the bank, not just 10% of my money and spending and investing the other 90%. That's me personally. I think it's absolute robbery. The proposal sparked fierce opposition from the largest financial institutions, including JP Morgan Chase. Of course it did. They want to stay profitable and make as much money and be as filthy rich as possible, and was sharply criticized by Senate Republicans that are being paid from the banks. Probably. It doesn't say that in the article, I would just assume. Here's the article right now that it's referencing. Federal Reserve Powell regulatory proposal criticized by banks will be revised by the end of the year. Well, guess what? The end of the year was last week. It hasn't been revised. Remember, you guys, a sweeping bank regulatory proposal will be significantly revised by year's end. And they said significantly. I mean, they just asked for 10% of their money to be held. The proposed rule issued last summer by the Fed and other regulatory agencies is intended to implement changes that were negotiated internationally after the 2008 global financial crisis. Among other things, the rule would require the largest banks, those with more than $100 billion in assets, to hold more funds in reserve to protect against bad loans and other potential losses. This confuses me a little bit because on one hand, I want to take away from the banks, right? On the other hand, and Michael Barr seems to have been in that chair making sure that the Basel III was implemented, which is something that I think as a country and as citizens, we strongly need at minimum. But on the other hand, I'm thinking, well, this whole time, and I think Michael Barr got in there in 2022, I believe. This whole time, he's a top financial regulator, but he's never been able to implement Basel III, which makes me think either, people in his own party are backing him up against the corner, or he's just not strong enough to do his job. What do you think about Barr's work on Basel III? And do you think it's a good idea, for the man in charge of these types of regulations to step down? Do you think that's a bad thing, or do you think it's potentially a good thing?
They create regulations with the idea of putting a Band-Aid on a problem. The regulations are never going to work, right? They don't even understand how a bank operates. This is the problem with the Federal Reserve. So look at it this way. Let me try and break this down. What do the banks want? Well, the banks want high leverage. The higher the leverage, the greater the rate of return on the invested equity. So if you don't have that much money in your asset and you're highly levered, because you have such a small amount of money in the asset can be a bank, it can be a piece of real estate. It gives the illusion, which is, oh, well, we can make a 15% rate of return on our 5% equity in the bank. The problem is they're using depositors' money and saying, well, we can sweep that money if something goes wrong. That should not be part of the Basel III. What should be done here is that the assets of the banks need to be kept on the bank. When you make a bank loan, you do not have the right to sell that loan off. Now, yes, they do in today's world, but that is what contributes to the high leverage, and that is what contributes to the idea that the banks can sweep the depositors' money and give them back a share in a bankrupt bank when they go broke. And you've got, let's call it 700 banks right now today that are on death's doorstep that would not exist but for the backstopping of the Federal Reserve. So, okay, this is one guy who's taking a position, but why is it so difficult? I just explained it. The point of the matter is that the banks want the high leverage, and he's saying, well, you shouldn't have such high leverage. This isn't even debatable. This literally is proving my point. Shut this damn thing down. It's a poison. It's a cancer. And all of this is occurring on the backs of mom and pop. Either mom and pop's money is going to get ripped off because the banks are going to steal it and give them back a share in a bankrupt bank, or because of the shenanigans, paper chasing paper, the pensions and the 401ks are going to shaft mom and pop. Your choice. Either way, they are the purveyor, the key purveyor of inflation. They're responsible for this.
You know, the banks are already, and we've covered a lot of this, Mitch, the banks are already highly leveraged. So when I hear President-elect Trump say that he wants to deregulate even more, Mitch, that concerns me. Let's go back into the article. During last year's presidential campaign, there were published reports that former President Donald Trump would try to fire or demote Barr. But at a press conference in November, Fed Chair Jerome Powell said the president doesn't have the legal authority to do either one. Senator Tim Scott, who is in line to chair the Senate Banking Committee, which oversees the Fed, on Monday called Barr's proposed financial regulations disastrous. Unbelievable. And this is like Basel III. Like this is from 2008. It's like the more time that goes by, the less powerful it is. And I question whether or not they're even going to implement it at this point, Mitch. I mean, this is absolutely disgusting. He has previously said that they would limit lending by banks and weaken the economy. I don't like language like that, Mitch. Michael Barr has failed to meet the responsibilities of his position, Scott said in a statement. I stand ready to work with President Trump to ensure we have reasonable financial regulators at the helm. By stepping down as vice chair but not governor, Barr has limited the Trump administration options to replace him. All 7 seats on the Fed's Board of Governors are filled, and an opening won't occur until Governor Adriana Kugler's term ends January 31st, 2026. Probably more of a reason for him to just shut it down. If you can't fire them, just shut the whole thing down and fire everyone simultaneously. As a result, for now, President-elect Trump could only appoint another current governor at the top regulatory position or wait until next year to fill the vacancy on the board with a new regulator. Governor Michael Bowman, a Republican appointee, has publicly supported less stringent financial regulations as a potential replacement. See, that's what I don't like to hear, Mitch. Less stringent financial regulations, because I'll argue right now, especially with non-banks, what financial regulations?
So I have this dealt with in the article. Tim Scott is right? You don't want to slow down the amount of loans going into the market. You don't want to do that. So it's 2 different things. Again, they create regulations that do not get the job done. The last thing you want to do on this planet is slow down money going to mom and pop and small business. Mom and pop and small business is the economic engine of the United States of America and frankly, the rest of the world. You don't want to slow that money down. What you want are qualified loans. I dealt with this in the article and I said, look, you idiots at the Federal Reserve do not even understand what a qualified loan is because you have no interest in caring. You look at it from the standpoint that this is a portfolio loan. The banks look at it and they say, well, we have 300 loans. This is a portfolio loan. If we get burned on a handful of them, that's a cost of doing business. That's wrong. What they should be doing, because remember, they're moving those loans off the books, right? They sell them. So they're nothing more than a monkey in the middle who's paid a commission. That's what they are. So you see, you have 2 entities sniping at each other, neither one of which are doing their job. Yet the Federal Reserve is not there for mom and pop. And that's the point that Tim Scott is missing. He's 100% right. You don't want to slow down the money going into the economy. What you want to do is qualify the money that's going into the economy and don't let the banks sell this stuff off. Make them responsible for the loans that they're putting on their books. When you do that, now you've got something. But here's the thing. If you do that, you do not need the Federal Reserve. It is a completely useless, sucking money right out of our system in the form of taxes. And what are those taxes? It's called inflation. That's what the Federal Reserve is doing to the world. The IMF is the mirror of the Federal Reserve. The Bank of Canada is the mirror of the Federal Reserve. This is a criminal operation designed to support the banks, and it is failing. And the sooner people understand that, the faster we get out of this mess.
You know, Mitch, so my immediate knee-jerk reaction is then we need more regulations. But here's the thing. I like what you said. The current regulations aren't even working to begin with. I like how you're explaining how important qualified loans are, right? But the interesting thing about that is well, qualified loans in 2022 for a home loan, it may be completely different now because property taxes and everything went up. But maybe instead of more regulations, what we need is new regulations. Is that fair to say?
It's real simple. shut the Federal Reserve down, say, banks, you now own the loans that you put on your books. Done. You have to understand something here. The Federal Reserve and the local taxing entities act exactly the same. Do you know that the local taxing entities say, well, we have, in this case of Texas, we have the state comptroller, we have TDLR, we have TALCB. None of them claim responsibility for being able to fix the problems. They created the problem. They allow the taxing entities to exist. Then you have the Federal Reserve doing the exact same thing, claiming autonomy. You, the federal government, can't tell us what to do. Okay, let's try it this way. If nobody claims responsibility for their actions, then do you understand there is no law? That is the exact case that we're making right now at the Fort Worth Court of Appeals. If there is no law, there is no justification for charging the tax, and there is no authority to grab any money from anybody. Either the law exists for both parties of the contract, or it doesn't. And if it doesn't, what in the hell are we doing paying these taxes?
All right.
So you see, it's all hooked at the hip. You cannot say, well, we're going to regulate this and regulate that, and turn around and do the exact opposite. This is why the Federal Reserve is failing, and this is why the inflation has gotten so far out of hand.
I think, Mitch, I think that I understand your point. Essentially, what you're saying is, I mean, the government needs to stop getting involved. The regulations that they are issuing right now just doesn't work. And so if you were to deregulate and let companies and banks fail because of their own bad decisions, that's the type of economy and markets that we need.
You want to get rid of the inflation? That's what you do.
Now
Build a Federal Reserve.
That makes sense, right?
Yeah.
But unfortunately, the way that the country's been ran the last few decades, I mean, and I always say it's guilty till proven innocent. When I first hear deregulate, it's a knee-jerk reaction, and I'm like, you guys are just going to screw us once again. So what essentially you're saying is what needs to be done, right? But we don't know if it's going to be done. Do you have faith, Mitch, that they're going to make, that this new administration is going to make profound changes in our economy and our markets?
Well, okay, let's bring this back to math. The answer is they don't have any choice in the matter if President Trump wants his legacy to be solid. And I'm going to make this point tomorrow night at this meeting. If you look at the amount of money that's been stolen by virtue of inflation, which is a tax, and I've walked this through in this document, I'm chomping at the bit to get this thing out into the public realm. But if you walk this math through, the central appraisal districts across the United States in the last 5 years have created 21.25 trillion of hyperinflated real estate valuation, from which in the year 2024, a few days ago, they stole 450 billion from mom and pop. If you look at the Federal Reserve and the economic damage that it's done in terms of inflation across the US, never mind the rest of the world, just across the US, that's massive amounts of money created by inflation to the tune of, let's call it 10% a year in real numbers. The CPI is a lie. Let's call it 10% on inflation. These are trillions of dollars additional. So the reality is the economic damage that's being done to the system itself is going to cause the system to implode, right? The only fix that somebody could say is, well, we'll just keep printing our way out of it. And then it turns into the Weimar Republic, which is why I keep saying this has got to be reversed, and it's got to be reversed quickly, because if it doesn't, the market at some point will wake up, and all of this is going to happen in a grease lightning speed. And once that snowball starts moving, you cannot stop it, because the confidence of the good faith of the United States of America will have been shaken to its core, and the value of the US dollar will disintegrate because nobody will want it. You've got to restore credibility. He's on the right track. Does the Trump administration know of anything that I'm speaking? I have no idea, but I'm hopeful that by tomorrow night's meeting, this thing will start moving where it's got to go. And this needs to happen on a national scale, and everybody's got to know what's happening. But this document that I've got, I mean, these 50 bullet points, this is serious.
I hope that your meeting goes well, man, and we'll keep the viewers updated on all of that. But the thing here is, you know, like, let's just let the banks fail. The risk of dispute over the position could be distraction from our mission, Barr said in a statement from the Fed. In the current environment, I've determined that I would be more effective in serving the American people from my role as governor. Well, if he didn't implement the regulations and we have out of control inflation and the banks are over leveraged, then why would he stay? And what good did he do? Barr took office in June 2022 and was later embroiled In the spat of bank failures in the spring of 2023 that started with Silicon Valley Bank, the third largest failure in U.S. history, Barr oversaw the preparation of a report that blamed watered-down bank regulations, the Fed's own staffers, and the bank's managers for the failures. And see, the thing is, Mitch, is I like that. And then I actually got the article right here. Fed faults Silicon Valley Bank execs and itself in bank failures. How responsible do you think the Federal Reserve is for bank failures, or rather, Mitch, the lack thereof?
100%.
Which one? The lack of bank failures?
Look, I made this case again in the article. If the Federal Reserve didn't exist, you and I wouldn't be having this discussion, and the banks would be standing on their own because there'd be nobody to bail them out. Instead of having what was 10,000 banks now down to, let's call it 6,700 banks or whatever, the point of the matter is they would be much fewer, which is to the benefit. This inflation that everybody has suffered from over decades, by the way, this isn't just something new. I mean, this goes all the way back to the 70s. None of this would have happened because this is outside of normal market conditions. Normal market conditions being supply and demand. So if your demand is greater than your supply, you end up with a small amount of inflation. But the gyrations of what's happening with the inflation is directly correlated, irrefutably, 100% to the existence of the Federal Reserve. They have monkeyed around since the day that they were created with normal market conditions. Well, we're going to have quantitative easing. And then they turn around and the flavor of next week is quantitative tightening. These methods are schizophrenic and they cause the sine wave, right? There's a sine wave in business. They cause that sine wave to go up, down. Instead of smoothing it out, they're causing gyrations that are up and down, and that snaps the back of normal economic cycles. And that is 100% falls at the feet of the Federal Reserve. That is the problem. Shut this damn thing down. I've got the math, I've got the proof, and the fact that I'm on the outside of this, looking at this, not from the inside, I'm just looking at the straight math. I'm looking at the history of the Federal Reserve. And as I've said, they have never been on the right side of mom and pop. They have always been there to protect the banks. And that is the failure of the Federal Reserve. This has got to go.
I hope it does go, but I got one last question and then we're going to get the viewers out of here, Mitch. And I want you to really think about this. Obviously, we don't know what's going on in people's heads, but being that Barr stepped down and is now kind of protected, he stepped back into the board of governors. Now people say he can't be touched by Trump. What do you think Trump's next action will be? And, you know, I don't know if you can say on a scale of like 1 to 100, what do you think the chances are that he actually shuts down the Federal Reserve?
Let's put it this way. I think when somebody knows the truth and understands what's going on, the answer is adamantly clear. It must go. If they don't understand the truth or people want to, and that's what we'll find out what's going to happen at this meeting tomorrow night, because there's people here in Texas that are saying we need to eliminate the real estate taxes, and they want to try to do it by legislation or walking it down over a period of time. That isn't going to work. Mom and pop don't have the money. And I keep pounding the table on this, but you have to understand the difference between mom and pop surviving and mom and pop going bankrupt is the real estate taxes. That $9,000 that you and I spoke about yesterday, that's real. If that $9,000 is stripped away from mom and pop, they're broke. That's 32% of the population household population cannot afford the roof over their head. That is where we are at. So how could anybody possibly justify, yes, let's keep this inflation going. Yes, let's keep the high leverage in the banks going. The reality is, if you do that, you are literally working against the economy of the United States of America, which is mom and pop. And our garbage has been sent around the globe as a direct result of the existence of the Federal Reserve, the IMF, and the Bank of Canada. They're the mirror image. So when you know the truth, how could you possibly justify and say, well, we're going to walk this down slowly over time? That slowly over time doesn't exist anymore. The inflation has eaten the time. That's the problem. There's no money to pay for this. Fix it once and for all, kill this off, let the market conditions do what the market conditions do, explain to mom and pop, just as we're doing here right now, what the truth is, and they'll get on board with this. because it eliminates the inflation and it installs and puts back a regular economic business cycle based on true supply and demand, not push supply, not push demand, which are all reactions or knee-jerk reactions to what the Fed does. And one other thing on the Fed. So if you look at this, what are the odds of the Fed saying this week it's quantitative tightening and the next week it's quantitative easing? Well, the odds are 50-50. Where the hell is the edge? There's no edge in the existence of the Federal Reserve. A 3-year-old could literally stand up, flip a coin in the Federal Reserve's office, Chairman Powell's office, flip a coin and come to the exact same conclusion that Powell does. He's an attorney. He's not an economist. This guy knows nothing about the math. He's a pitch man. The pitch man doesn't know what the hell he's doing. He may be a very nice guy. I'm not saying that he's not. I mean, but that's not the point. The point is, look at the economic damage that your existence is doing to mom and pop.
Well, the question was, though, I understand all of that, Mitch. Okay, so do most of our viewers. We understand that. My question to you, sir, do you think that Donald Trump will get it done? Do you think he's going to close down the Federal Reserve on a scale of 1 to 100? What would you say that likelihood is?
It's hard
Not
to tell.
whether he needs to. I already know he needs to.
Yeah.
Our viewers know he needs to. I'm telling you, I don't believe in him. I hope for him. I don't. Guilty till proven innocent. Mitch, we know what the problem is, brother. I don't know that he does.
The guilty to proven innocent.
Do you think he's going to shut down the Federal Reserve?
I don't know. I do know that it's necessary. I do know, I agree with you that the proof is in the pudding, but I can't. Okay. Nobody has any comeback to this. When this document it gets released, you've already seen bits and pieces of it. But when this document gets released, what's the argument against me? Anybody, please take the opposite side of the argument. When you look at the math, there is no argument. It's basically what we think. Well, but your thinking is why we're in this mess in the first place. So if he's got the right people around him, then logic says, yeah, he'll end up shutting it down. Now, does it take instantly? No. Will it happen over time? Probably. And that may be the saw-off. But the reality is, because they may look at it and say, well, it's 23,000 people and we're going to lose their jobs. However, rumors are that there are certain entities in the government that are on the chopping block. So if that statement is true, it's the Federal Reserve that's number one, should be number one.
Well, you know what? When I take a step back, I don't think he's going to close the Federal Reserve unless people step up. If there's enough public outcry, I believe Trump will react to enough people wanting something, right, and wanting to make a difference. And if it's something that he could agree with and understand and support, then maybe we have a chance. But Mitch, absent the public waking up, breaking apathy, and telling this man, like, hey, this is what we need, I just don't have that faith, brother. I want it. I know it's needed. I know the math. I know the Weimar Republic. But regardless, we'll be watching and we'll be reporting on it. Now, Mitch, I want to give you the last words before we go to the viewers.
Well, your point about the public getting involved is the reason why I'm writing these articles in Zero Hedge. As of early this morning, I was told that one article is well over 100,000 readers at this point. So it's gaining. And then these videos that we're doing are gaining, even though we had some issues with the channel being throttled. But the bottom line is they're being pumped out there. So to your point, it's 100% right. This has got to be from the ground. This is why we keep saying this takes all hands on deck. And I wish I had started the Zero Hedge and started communicating with them beforehand because of this meeting that's coming up. But the more people that know about what's going on here and understand it and can articulate it, the more power we have in order to make those changes. So yeah, you're 100% right. This has got to come from mom and pop. The politicians don't take the time necessary, like we've laid out in these videos, to understand what's going on. And even though it affects their own family, themselves, and their friends and their neighbors, they just simply don't get the program. But like I said, when you go through this document on the Federal Reserve that we're about to launch, tell me which point is wrong. I defy anybody. Show me where I'm wrong. Well, if I'm wrong, okay, fine. We'll admit that one paragraph. The problem is you got 49 more to go. So shut it down.
One of the issues is the jealousy, the greed, the envy, the apathy. I mean, that's the type of stuff doesn't look at math. So I'll be worried about it, Mitch, but I'll be praying and we'll be reporting on it. So that's the good thing. And to all the viewers, I really appreciate you guys following along. Obviously, there's going to be multiple things linked in the description. We are coming up to tax protest time. So don't forget, use the links in the description. Start battling the values on your houses. Obviously, Mitch and I are going to walk that through with you as we make our way through 2025. And other than that, guys, happy Tuesday morning. I hope you guys have a great morning. I hope you guys are successful, and I hope you love yourself, and I hope you love your life. And other than that, if you guys are out there investing in real estate, living your life, investing in stocks, whatever it is, you guys already know. We wish you luck, and we hope you win.